Welcome back to Business in Vancouver on Roundhouse Radio 98.3. We are the daily business news program from the Business in Vancouver newspaper and from BIV.com. I'm your host, Haley Wooden. Several weeks have passed since the Bank of Canada raised its key interest rate for the first time in about 7 years. Now, it wasn't a big raise, about 25 basis points, but it does mark a big shift in policy, and it's widely expected that there will be more hikes to come. So with that in mind, it could pose some challenges for borrowers, including small businesses. With me today for our bi-weekly Management Matters segment is Mark Wardell, president and founder of Wardell International. Thanks for joining me.
Good to be here.
So what's your take on how significant this rate hike is for small businesses and what they should be doing now?
Right. So here's my take. And my take is maybe interesting because what I say to people about interest rates that grow, same thing I do when I'm talking about the value of the Canadian dollar going up or down, these external factors, okay, that influence business. I say get over it. I know it's really, to some degree, get over it. First of all, this is not that much, and it's likely to be low for some time, I think. I don't know. I can't predict. But here's the thing. Over time, it's going to get higher. Like at some point, it's going to be high. Some point, then later, at some point, guess what? It's going to be low again, right? I mean, this is how things go. And so if you build a business focusing on that, you're going to struggle because at some point, this thing that you're like, if you need money at a great rate in order for your business to survive or in order for your business to grow, that's the only way your business can grow is because the rates are low. Ultimately, that's going to bite you in the behind because at some point they're going to go up. Just the same way, like I said, if your business relies on the low Canadian dollar to export or a high Canadian dollar to import or something like that, at some point things are going to switch, which they did, which they will, and you're going to be affected by that. Now, I'm not saying you don't take advantage of those things. For sure, if there's an advantage of cheap money and you can use that money to invest in your company and grow, then absolutely go for it. But don't rely on it. So that's why I kind of say, tongue-in-cheek, get over it, you know?
You mean don't rely on things that are totally outside of your control.
Exactly. Not that we do that as human beings ever, right?
No, never. Yeah. So what does this mean then? Is it financially prudent to plan for, say, being able to withstand a high interest rate from the get-go? And then if rates are low, hey, you have some extra cash?
It's about understanding what to do with borrowed money. That's really what it comes down to. So borrowed money should be used to grow your company. You should use it to invest in. You may need it. You made it to manage cash flow, but even in that situation, you're doing it for a growth purpose, right? And so you should be borrowing money for the purpose of growing. So you need to understand the value, the return you can get from that invested money. We talk about taking that money and investing it in your company. What's the return you can get from that? And then do the calculation. And then either it makes sense or it doesn't make sense to borrow that money. It's not about how much the money costs. It's about what you get in return for investing that money back in your business. That's the perspective.
So where should small businesses begin to do that?
Well, a few places. Well, probably two main places, I think. One, of course, is in growth, which would mean sales and marketing, and we can talk about that a little bit. And the second one would be in efficiencies. Like, for example, I can think of a client right now that we're doing some calculations. Should they buy a big CNC machine? They're a manufacturing company, Central Canada. Should they buy a CNC machine? They've got one. Should they buy a second one? They're discussing this. Well, it's just an ROI. They spend a lot of money on overtime and employees. How much can we save? What can the benefits? How much more can we produce? We run the numbers and we make a decision.
Mm-hmm. If a small business was looking to make a major capital investment, or let's say a medium-sized business to include them in this, over the next, say, 5 to 10 years, or maybe looking at a period of rising interest rates, wondering if they should do that now, get locked into a rate, or hold it off, what would you say? How should they approach that from the way that they think about this problem?
So if you're borrowing money to like I said, to invest in a machine, then for sure we're gonna lock in the rate if we think rates might go up because we can predict the return that we expect to get from that machine. Obviously, if you're using an LOC, often those are line of credit to manage your cash flow. Often variable rates are tied to that, so you still need to be, I think, cautious about how deep you go into that. But again, it's a cash flow perspective, and part of that maybe comes back to having business owners, big and small, truly understanding their financials, because this is an area that sometimes that. If we're talking about entrepreneurs in particular, which are these right brain, creative people that we love and need in society, they tend to be more artistic types of individuals. They tend to not love the detail of money, of numbers. I mean, they want to make money, they want to grow, they want to do things, they want to build society, they want to contribute, but the details of spreadsheets and adding and subtracting and dividing and multiplying, they hate it, right? They hate it, right? Yeah. So you got to get past that. You got to understand that there is tremendous value in the numbers. You got to work with that mindset. Like, for example, business owners, being those right brain creative people, are often visual people. So what do? Graphs. Right? I mean, let's look at trends line. Are expenses going up? Or are they going down? Or staying the same? And we can. How does it compare to last year? How does it compare to our goals and so forth? And we got to get over the fact that those things are negative. Understand that they're positive, useful pieces of information, and we can really engage in that stuff.
We also have a whole generation now that's sort of coming of age, starting their own businesses in a period of falling interest rates, right? Babies in the 90s, or they're really high interest rates compared to what we have now. And, having a 0.5 percentage point for a key interest rate seems sort of normal, which historically it really isn't. How important is it to remain cost conscious when interest rates are low, as well as when they're high, when times are good, when times are bad? Yeah,
so I totally agree. And that's why I say don't build a business based on low interest rates. Build a business and then take advantage of low interest rates. So always look for ways to save costs, always look for ways to save money, always look for ways to become more efficient and more effective with the work that you're doing in your business. Overtime can kill a company. Costs of repairing equipment that you don't keep up current, these things can kill a company.
I'm speaking with Mark Wardell. He's the president and founder of Wardell International. We are in our bi-weekly Management Matters segment talking about what a period of rising interest rates could mean for borrowers and small businesses. Does it mean you need to raise your price, or could small businesses simply raise their price? Not that you would advocate for this, but raise it to cover any costs that they incur.
Yeah, for sure. First, understand that everything is negotiable. Almost everything is negotiable. We do this thing with clients. So we talk about raising price, but first I think I want to talk about bringing costs down, and then we talk about raising prices. Sure. And so we do this thing we call the savings game. And what we do is we take the chart of accounts, which is just your list of expenses in a business, and we put that whole list out, and we take a room full of managers, and we say, okay, we're going to lock the doors, and we're going to take this chart of accounts, and we're not going to open those doors until we've come up with at least 3 creative ideas. No matter how wacky or out of the box they might feel, we're going to have at least 3 ideas for how we could reduce expenses or reduce costs for each one of these line items. We might negotiate, we might, we could do without, whatever it is. Let's just open up our minds and find creative ways to do that. And I've had, we had a client, for example, well, actually several clients in the oil and gas industry. Well, a couple of years back, it's getting a little better now, but people really got whacked over the head big time, right? Yeah. With the falling oil price. And especially, so businesses, small businesses that are not necessarily the oil and gas companies themselves, but that are servicing that industry, suddenly were hugely affected. So we had to do some real triage. We had to do some real major hard look at the expenses in those companies and cut them hard. And we worked like crazy to get down to just zero-based budgets. But you can, if you get creative, you'll be amazed at what you can negotiate. Almost everything on that chart of accounts is negotiable.
Should then creativity be top of mind or the go-to mindset for small business owners, so that, even when times are good, if they're looking at creative ways to invest profits that they've made, right?
Yeah, for sure. I think trying to hire creative people it's hard to find them. It's hard to identify who they are. But if you can do that, it's a huge benefit.
Okay. So we talked about reducing costs and being creative in doing that. When should you raise prices, and at what point is it sort of expected, if interest rates are going up, maybe your suppliers or clients, they expect that prices are going to go up too?
And people do understand that prices go up, right? And I think it's better to focus on value perhaps than it is on price when you're selling your products and services as well. So everybody tends to focus on the best price. But once again, if you're focusing on the best price, let's say I'm going overseas and I'm buying my supplies so that I can get a discount on the products that I'm selling or something like that, and I can sell for a better price. Well, guess what? Eventually, my competitors are going to discover the same thing, and they're going to go do the same thing, right? So focusing on value is the way that we maintain strong margins. And value often comes down to providing outstanding customer service and giving people a really incredible experience with the buying of the products and services, and just really focusing like crazy on that.
In the interest of keeping costs low and maybe trying to please customers and offering something of value, is there an opportunity, at least at this stage, where it's just a small key interest rate hike, right now for companies to maybe beat their competition and not raise prices because they found other ways to sort of make the numbers work?
Yeah, I think so. I've got one client, for example, in Ontario, and we've got this. This is a slightly different but similar concept. We got a minimum $15, and we maybe here eventually a $15 an hour minimum raise that's coming into play. Well, they've been able to set things up in such a way that they don't have to raise their prices. They already pay their employees a minimum $15 anyway. A lot of their competitors don't. They've done a really great job bringing efficiencies in, so they're using that as a marketing strategy. They're saying, hey, look, guess what? Minimum wage is rising, but we're not going to pass that on to you. You're going to still get the same price. And so you can do the same kind of thing in this environment. You can use these as marketing leverage strategies, with your, hey, the interest rates are going up, but guess what? Our prices are not, right?
There you go. Sounds pretty good to me.
Sold.
And then before we leave off for today, there's of course speaking to customers, offering them something of value. But what about within your team internally? If you're having to cut back on costs, maybe people don't have the same expense account they once did. How do you really get everyone on board as sort of a cost conscious culture?
Yeah. So I talked about the savings game and the chart of accounts. Each one of those line items, those expense items, you want to connect that to an individual. So the way we say is, look, you've got office supply costs, whatever it is, doesn't matter. Anything on that chart of accounts, you want to have a name, an individual's name beside that. And that person is accountable for watching that number and making sure that number doesn't get out of hand. So that when you meet together, everybody starts talking about money, everybody starts talking about numbers, everybody starts to get into this conversation, starts to behave like entrepreneurs. And you can even, if you can go far enough to understand the amount of money that you can save, you can even share that with some of the employees, share some bonuses and some profitability that goes back to employees for them behaving more in an entrepreneurial fashion, which of course is tremendous for your corporate culture.
I like that. Behave like entrepreneurs as opposed to, and nothing against accountants, but if you're approaching a finance meeting, a lot of people can get down to, just focusing too much on the numbers as opposed to solutions, right?
Absolutely. Let's have a company of entrepreneurs and we'll be successful.
I like that. Mark, as always, thanks for joining me.
It's been fun. Thanks.
That's Mark Wardell, president and founder of Wardell International, joining me for our bi-weekly Management Matters segment. You're listening to Business in Vancouver on Roundhouse Radio 98.3. I'm your host, Haley Wooden. Stay with us.